What's up, everybody? It's Stocks Pharrell. Hey, it is absolutely insane. All the computer issues your boy goes through. However, I did it. It's late. I'm sorry. I have to post it because it is what it is. Today, I got three plays for you, okay? I have Bank of America, I have Intel, and then I have SoFi. Absolute bangers, I believe, very, very soon. So, without further ado, I've spent enough time doing this tonight. Let's just get into it. What's up, everybody? It's Docs Pharrell. So, hey, this isn't a recap video, but I must say that this whole year absolutely crushed it with options. Hands down, the best year I've ever had in options. Now, your boy is not um, killing it on like a dollar amount. For me, I'm killing it, but at the same time, I play very conservative. At the end of the day, the percentage is up. Your boy's been making more withdrawals than he's been making deposits. And it's just a beautiful thing. So if you've been rocking with me this whole year, since I made some major changes back in December till now, then hey, let me know in the comments. Um, if you're eating with me or not, it is what it is. But I appreciate everybody that's been here with me on this journey thus far and continue to support me going forward. So, without further ado, let's get into a couple things here. So, at the end of the week on Friday, I had went and did a live stream after work and after hours, and a couple people in the community suggested a few plays for me to talk about and maybe put on my watch list. And I said, hey, if I look into it, and if it makes sense, then I'll put it in the options trades video, which I am doing today on both plays. And I believe those came from Bart and my boy Chef. So if I'm not mistaken, please, if I'm wrong, let me know. If you were the one that actually suggested it, let me know. My apologies. I'm kind of just rolling with it. But shout out to y'all for making suggestions because you know we all can eat, and that's what it's all about, right? So, sorry, my eyes are low. It is 12:47. Your boy is tired, but anyway, first banger on the list is Bank of America, ticker symbol BAC. Now we all know that we just had a bank earnings that came up, and of course you've seen a lot of breakouts occurring, which you're seeing in these charts here. Now, what I wanted to do is show you both and a call and a put for Bank of America based on what I've seen. So we have a triple distribution going on right now. So which tells you that there's three different levels in which price is being accepted by both buyers and sellers. Okay, so we're in between a double distribution right now, um, which I have listed here. Now, how we're playing this is to the upside. We need to break above the high or that POC that you see above. I don't know if you know how to read volume profile, but pretty much the high volume node is longest um, the longest stick or point on that volume profile that you see to the left of the chart. So here's the plays. Entry is 42.81. Stop is 42.72. The first take profit target is 43.17. Now I'm doing something different here, okay? To which I am listing the max take profit target, which is going to be 44.07. I put the first take profit and the max take profit so you guys can pretty much like know where the max range or target is, but then you also have that ability to um, take profit when you so choose. Now there's an orange level in there, if you can see the screen, to which is a known level of resistance, because that is a low volume node area. So look at it, pay attention to it. That could be a take profit target for you there. Is right above the first take profit target of 43.17. Okay, the contract that I'm looking at is the $44 call that expires October 25th. Now, yeah, October 25th. Now, this is definitely a minnow play. Why? Because it's a 4 cent contract, right? Right. So it's $4. That's all it's going to cost you to get into this play. Um, and but I want you guys to understand and see the amount of open interest as well as the level of volume that's going into this contract. So it doesn't take much for you guys to hop in. And if you are new to trading, if you are been on a losing streak and you need a win, maybe these are going to be the plays for you because you don't need to front up a lot of money and you can just hop in and then just enjoy the ride. Rather, we're going to go up or down. Okay. So with Bank of America towards the upside, one thing you notice when you zoom out, you see higher highs and higher lows. Um, on the 4 hour chart, we're above all the EMAs, and then there's that triple distribution, but we're between a double right now. Um, in which I explained to you what that is, and that is why I chose the levels that I chose for the current call option that we're looking at right at the top. Okay, so let's see if I can do. Yep, right up there. Yeah, right there. Okay, got it. Yeah, that way. All right, so let's look towards the downside. Okay, because if a stock can go up, it can also go down. You just never know what's going to happen in this rate hike and lowering environment, economic news for presidency, the wars overseas, all that stuff. Anything like that can bring the stock down. So, how are we playing that? Well, you see, I talked about that highest um, level of on the distribution, right? Um, so now we're going to talk to the one right below it. Okay, so essentially we're looking for it to break below this level in order for us to take put options. Okay, so the entry points are also highlighted in yellow dashes. Okay, so anyway, um, for the downside, we have long top wicks at the top, and buyers are pretty much struggling to break above that 4281 level. Okay, um, so we have price rejection, so there's a chance for us to fall back down to earth. Okay, because if you see that POC, that bottom distribution, there's no little to no volume there, which means that there's not much that's going to stop this stock from falling all the way back down to that bottom level distribution, which happens to be the POC on this particular chart. Okay, so what are we looking at? We're looking for entry at 41.98 with a stop loss of 42.07. Okay, the first take profit target is going to be $40.94, and then the max take profit target is going to be $37.59. The contract that I'm looking at is going to be the $41 put option, okay, which is costing $9 right now. Okay, that expires at the end of the week. So that is the play there. Hopefully, it makes sense. Um, Essentially, based on what I just told you, I have more confirmations towards the upside than the downside, but there's a bias towards the downside on the short term, okay, because of the level of resistance that we received at the highs that you see, as well as on the short term time frame, you're seeing the 21 and 50-day EMA bend down, and then of course you're also seeing the price action fall below those. So now we're between the 50 and the 200 EMA, with the 200 being my red line. So that's that. Okay. Any questions? Let me know. If you're playing it, let me know. If you have any feedback on what you see there, let me know. But let's get into the next bangers on the list. All right, and that's gonna be where are you? Oops, my bad. That's gonna be. Come on now. Am I doing this right? There we go. All right. Intel and SoFi. Now I'm only looking at towards the upside on both of these plays, and I will explain. Okay. So first on the list is Intel, ticker symbol INTC. A couple key things with Intel is right now, They actually have earnings coming up October 31st, which is Thursday, which is going to be after hours. Now, I didn't know this when I was looking at the charts, but of course, intrigued me a little bit more based on what I was observing. So, for one, Intel is technically in a downtrend. You'll notice that it's in a descending channel where it's showing resistance at the descending line of a descending line of resistance, and then there's a support at the descending line of support. Right, it's a channel. Right, so anyway, but within that channel, you're also seeing I want to say that's a symmetrical triangle. I have to double check my diagrams. However, it's a neutral position, and that's where you see that flat bottom and then that angled trend line. Okay, so it's showing resistance there at the top, and then it's showing support at the bottom. Right, so there's a floor, but as you can see, it's a lower high, and then the lows are pretty much level. Okay, so with Intel, you got a triple distribution on this chart. Now, I don't have it on this chart particularly, but I might just bring it up. Yeah, I might just bring it up if it's easy for me to do this. It is not easy for me to do this. Let's see. Oh, Windows capture. Let's do that, and let's go to. Nope, that don't work. Sorry, guys. Anyway, I'll figure out my mess. My computer took a crap, and all my files and stuff are all just everywhere. So, and my brain ain't braining. So, anyway, there is a triple distribution that's there, which you guys just heard that explanation, so you know exactly what that is. So, the buyers broke above the lowest level, the lowest peak of the distribution. So, and they found support above it. Is currently in a neutral position, and that makes sense going into earnings because there's that unknown factor of what's going to happen, right? Um, and then there there's the earnings that comes out Thursday after hours. So those are the various factors that are contributing towards the upside. Okay, so my entry level is going to be 23.46 with a stop loss of 22.39. First take profit target is $30.08, but the max take profit for Intel is $42.74. Now, the contract that I'm looking at is in 2025 of January. It's $30 call, and it costs $62 at the time of this recording. Now, it will be more expensive by the time we hit that level. Okay, just so you know, this is why this is a Dolphin play, not a minnow play. Now, again, just because it's more than $50 doesn't mean that as a minnow you can't play it. And just because it's under $200 in your well doesn't mean that you can't play it. Okay, so it's just a gauge so people know what they're looking at. All right, so that being said, there's a ton of open interest on this position. Okay, and I think it's over 60,000, right, with a volume of 630. So that's very interesting to me, and the reason why I selected January 25th um, for an expiration, even though the earnings is going to come out this month, is because of how long it typically takes for Intel to run. And I want this to have as much room to breathe as possible. Okay, so um, it takes about 30 days per peak, essentially, for it to reach a new high, or before it shows resistance or rejection or whatever. So over the duration of the past 60 days, I've done this equation where I'm assuming that it's going to take about 30 days for us to hit. So I want 90 days of breathing room for us to be able to run this thing up and not worry so much about time decay and things of that nature. So I'm probably going to be looking into this um, pretty darn soon. So if it breaks above that level of 23.46 and is showing strength through it, then I'll enter there. Now, if it's showing weakness through it, then likely I'm going to be looking to grab it at the bottom of this level. and I will dollar cost average into this play more than likely and get it at a discount with the assumption that we're going to crush earnings and it's just going to go on a rocket. Okay. So that's that. That's a huge play. Okay. So just know, do your research, but it has a potential of being a banger. And I used to crush it with Intel um, back before even the chip thing with the government or whatnot. So let's move on, okay? And I'll explain one more thing. But let's look at SoFi. And you guys already know that SoFi is my absolute baby, right? Like me and SoFi go way back, right? Like a Cadillac on full flats, right? We go back. And I and everybody else have been crushing it on SoFi. We've hit anywhere between 30% to 600% on options plays on SoFi. And I don't think that's about to stop anytime soon. Okay. So what are we looking at with SoFi? Now, before we close, I let a huge part of the community know that if we were to shoot above $10 and showing strength into the $10 area, then I was going to hop back into calls and restart my dollar cost averaging position. Now, we did that. Now, of course, we're in a weekend. I didn't go really hard on it because you just never know what's going to happen between Friday and Monday, right? So I only grabbed one. That's okay. If you grab more, shout out to you. But this is what I see with SoFi. So one, everybody knows we have earnings on the 29th, okay, which is I believe a Tuesday, and it's gonna be in the morning before open. So Monday night, Monday before close is our last day to get into SoFi calls next week. Okay. So yeah, today's the 21st, right? We had a recent breakout out of what? Uh, it's a symmetrical triangle. Again, if I'm wrong, let me know. But got a flat bottom, right? And then you have a downtrend or a descending line of resistance. Okay, so we had that breakout. I don't think it's symmetrical triangle. I just can't remember what it's called. So my bad, guys. Anyway, we had that recent breakout, right? We closed in strength through $10.05, and then we're above all the EMAs, and we already tested the December high of $10.49. All of these things we have going for us. If you're looking at this chart, you're looking at SoFi like, man, that's major strength. You even see an OG or opening gap right there as well, which is also a bullish sign of momentum, right? So, what are we looking at with SoFi? I'll go over these levels and I'll let you know how I'm playing it, essentially, okay? So, this is the proper levels of what you should do. Um, Again, this is not a suggestion for you to buy, hold, or sell. What you do with your portfolio is what you do. This is what the buy the book, I guess I would say, rule is to play this play. So entry would be $10.49. Your stop is $9.20 with a take profit of $11.13 and the max take profit of $13.97. Now, that's first of all, that stop loss of $9.20, that is there because of how I'm playing SoFi, right? SoFi is going to be a dollar cost average baby for me, right? So I am playing this into earnings, and 920 is roughly the level I'm thinking of just exiting my position and looking for re-entry, okay? But again, I need y'all to understand what these levels mean when I say enter and stop, okay? The entries and the stops, okay? Now, when I say enter, right, that means that you're not necessarily entering at that level, okay? You're looking for price action and you're looking for strength through that level, right? So, hey, do you have a strong green bar closing at that level with the next bar, right, opening above that last bar, showing strength, and then do you have volume also increasing with that momentum, right? It's multiple things that you have to look for to justify entering the play. And I don't know your guys' level of knowledge when it comes to price action and things like that, but if you're playing it right and you're paying attention to all those things that you're supposed to pay attention to, then you won't get smoked. Okay, too often a lot of people are getting into these and they're just like, oh, 1049, get in. No, what if there's a long top wick and you got rejection, right? Like, you don't supposed to get in right there, right? You really got to pay attention. Now, if you have any questions as far as how you played something or if it didn't go your way, please hit me up. We can talk about it. You can find me on Instagram. You can find me in Kenny Grace's Discord all day. I'm always available. All right, so those are the levels for SoFi. The contract that I'm looking at is going to be the SoFi $12 call option, which expires January 17, 2025. Okay. This contract at the time of this recording is $58. Now, of course, if we wait for this stock to run up to the $10.49, of course, that contract is likely going to be in the $60 to $670 range. I'm not entirely sure, but that's what happens when the price goes up. So, but this has about 40 plus thousand open interest and a good amount of volume. So we're giving ourselves some time. Now, why do we give ourselves that much time? Because SoFi is heavily manipulated. And when its earnings comes up, this stock on great news could actually tank and then bounce, V-shaped recovery, and then take off, right? You just don't know with SoFi. At earnings, it can actually go on an absolute rocket. You just have to be prepared for anything with the stock and not be scared. All right, SoFi is not for the faint of heart. Okay, if you're not used to playing this stock, then you probably shouldn't, bet more. You never should bet more than what you're willing to lose. But ultimately, it is what it is. I will be posting when I am taking positions on SoFi on IG as well as the Discord. But that's all your boy has. I don't want to drag this out any longer than I had already. So, any questions? It is what it is. Hit the like, subscribe, notification, share this video if you think it's going to help somebody make some money. Again, not financial advice, but we all are in the same boat, just trying to make some bread. All right, so it is what it is. This is Stocks for Real. Take care.